going to be more, I suspect a lot of institutional coming in, and your profile of your investor is going to change, one suspects, as you move forward in here. But coming back to your ability to understand what the market is telling you, I'm not clear on.
Okay, so let me just give an example then.
Yeah.
So when we finished the PEA in end of January, we had a board meeting, obviously, and we described it as saying, well, we think this is actually a pretty good PEA. Like, we think that this is a very unique, it is a very unique PEA. We haven't seen numbers like this. I haven't seen numbers like this coming out of a PEA for a long, long time.
Yeah.
But you never know, right? You never know how the market is going to respond to things. And quite frankly, if the market didn't agree with us, we wouldn't be going down this track of spending $40 million to get to, permitting and FID, right? And so we put the PEA out there, not knowing how it's going to respond. And so far, we've been able to achieve a 3.5x. So that is definitively the market telling us, pass go to the next stage. This is something that's worth supporting. And to your point about institutions, the 3-week roadshow, 95% of the deal was institutions, and the big ones that everyone thinks are going away because they're getting fund redemptions. That's not true. They're actually not getting fund redemptions, and they are only looking for really, really, really quality projects. So 9 of them came into our deal, and that's what got the $35 million, and then Wheaton came in for $5 million. So that's, in my mind, being sanctioned for your plan. We will never push on a rope and say, we believe in this project so much, and the market is telling you otherwise. We will always be listening. We will always be reading the room. We'll always follow what we think is supportable in the market. One of the things that I really want to say as well is, like, we're doing a tremendous amount of work on the political side with the governments, First Nations, provinces, feds. I just got back from Japan and Korea on a trade mission that was effectively launched by the federal government. Obviously, this is in reaction to the threat to our sovereignty and economic independence that we're presumably going through right now. But the reality is that because we are in this condition right now where there really is this movement towards appreciating our greatest asset in Canada and our greatest potential partners overseas, this has been an environment that has never been more aligned in the 35 years that I've been in this industry for natural resource extraction. It is a unique time. And according to my chairman, who's in his 80s, he said that the last time he remembers this was like the 60s and 70s, around how much the government really activated in the mining space to take advantage of what is our greatest asset in Canada, which is natural resources. So that confluence of events is giving us a tremendous amount of confidence. It's giving our institutional investors and presumably other investors a tremendous amount of confidence that we are in pole position here. We are at that start line now. And of course, we can't control the market. But as I said, looking at some of these deals that just came out this week, including and especially the Tech Anglo announcement, this to me is officially entering in the second half of the cycle. So this is the 2005, 2006, where we were the last cycle that obviously lasted until 2010, 2011. So I'm very, very much encouraged that we finally have the macro tailwind to support our very aggressive and bold strategy. I'd like to remind investors and people that are watching this as well, is when we were not in a position to activate this very bold, aggressive strategy 2 years ago, and we didn't. Right? We held our sources. We were very, very, very prudent around capital allocation. We identified the opportunities that we actually thought was going to bring the greatest amount of value. We were solving problems that the market wanted us to solve, which was capital intensity. That was the number one problem the market wanted us to solve with respect to our project prior to releasing the new updated PEA, and we did so. So we are a very judicious group. We're a very methodical group that identifies what is, in the context of the market, what is important, not only in the long term, but also in the medium and the short term.
Well, your chairman's right. I think looking back, I think governments have knowingly and unknowingly created a fantastic environment for metals. But I'm not going to get political. I do want to understand, when you go through this process, and in Q1 at some point, where you say, look, we've got an idea, we've analyzed the heck out of this thing, a lot of data points, we are as sure as we can be about an exercise we want to go through, about identifying deeper, higher grade, whatever it is you're going to recommend. At that point, you're going to give guidance about how much money you want to be able to kind of chase after that. And how do you treat that capital raise versus the main thrust of this, which is going through the economic phase?
Sure, and I want to be absolutely clear. We're going to put it to the market. And we're going to put it to the people that are interested in seeing what the plan is for this district scale opportunity. Right. So we're not going to be arrogant in thinking that we know everything. We are going to get that indication of interest as part of putting the plan out to the market. And then if we have positive signs, and you can use whatever indicator you want. I personally like using share price and just positive feedback around the opportunity. Then we will go back to the same plan that we did in what we set out to do in May and June, which is Plan A prime. Plan A is to use it as an opportunity to create this strategic consortium group that is interested in our product, but might be a bit too early stage for them at this point in time, right? And so this is equity risk, and we all kind of can agree that exploration dollars and this type, especially in terms of district scale opportunity, is going to be exploration risk, or equity risk rather. And we'll see. We'll see if which plan comes into fruition. Is it more of the strategic partner consortium group first, or is it the public that supports first? So obviously. In the last offering, the $40 million, it was a little bit of both, but it was actually led by the public because the public was in a place where they supported us. The institutions really wanted a part of this plan, and therefore they came in and effectively were the price setters and the leaders for this project, for this equity offering. We'll go through the same process this time.
Okay, let's kind of park that up because I think you'll know more soon and you'll start a process and you'll come back to us and let us know how that kind of works and pans out. Just maybe you can summarize, finalize what it is what people will be buying into with the kind of starter project long term. Why is this the right model? Given this market, you know what's happening out there, right?
Yeah, it's again this point of intersection of the world that we've been talking about for ages now. The world needs copper, the world needs gold, the world needs projects like this. It's now become local in Canada, where Canada now needs these projects. Canada needs the economic independence. So from a political perspective, again, never been better. This project, again, has very, very strong economics, strong enough for the market to say, go ahead, this is a very, very strong project. Let's de-risk this as quickly as possible. But then lastly, I think, again, the reason why this is a very, very important project to advance is because that district scale is ultimately the prize. The prize is district scale opportunities. And if you believe that you have the potential around advancing a potential world-class district, and you have the data, you have the people that believe that this is something that is worth taking the risk, then I think it's incumbent on you to take that risk when you are in an environment that supports it. We would never take that risk if we were in an environment where our shareholders don't support it. So keep in mind, right, as I said before in some of the interviews, management owns about 15% of this, and between 5 individuals, it's over 35% of this company. So it's a pretty easy, quick call, at least from a shareholder perspective, to understand. This is outside of institutions, right? From a shareholder perspective, to say, is this a reasonable way to allocate capital? And if investors kind of give us credit for anything, it's growing the way we have in the last 5 years during arguably one of the worst parts of a mining cycle. Seeing the growth that we have been able to achieve in those 5 years with minimal access to capital, that should tell you that the capital allocation decisions that we make internally here are very, very sound, and they're very thoughtful. So that we're going to keep on applying that discipline as we go forward with our monies.
Sam, good to see you, man.
Thanks a lot.
Good.
Appreciate it.
Stay in touch, okay?
Yep, for sure.